Good afternoon, everyone. Today we're going to talk about trend lines, but I wanted to go over something first because I think it's extremely important. And one of them is I traded on the floor a long time on the CBOE. I was there when the SPX was invented, when not the SPX, but the options in 1983. I traded a ton with Sosnoff, with Tony Batista, with all the big people. So, I trade the same way they traded. And I want to make something clear when you bet on direction. I just want you to know that when you're messing around with the SPX, how did we make money? We sold premium. Now, they sold premium a lot of times just on probability. I sold based on chart patterns. I'll show you some of the ways. But let me just make it clear about something. If you want to go and sell like a 5650, like I'm just giving an example of things I watch, a 5650, 5670 call spread. So if you want to sell that, just keep in mind you're buying the 5650, 5670 put spread. Do you want to pay $15 on a 20-point wide spread? No, that's outrageous. That's not the way you make money in the long run. The way to make money in the long run is if the markets start to roll over, heck, you're selling out of the money one, and then you have a backstop. So just keep that in mind in there. So that doesn't mean you have to go buy way out of the money put spreads. It means you sell way out of the money call spreads. So I just can't stress that enough that we try to take advantage of time. So if the momentum changes where it just stops going up, then the out of the monies are going to get destroyed. And that's the way that we made money over years and years and years. So 95, 6 months I was on the floor, made money 95 out of 96. Last month, I lost. The only month I lost was the month I left, and that's because my dad had health stuff, terminal stuff, so a little distracted. But overall, you sell out of the money premium to establish a position. I just can't stress that enough, because especially on zero DTE, because you're trying to take advantage of the premium decay. So even if you don't have the direction right, you might make money. I mean, just so you know, he laughs all the time, Tony Batista, when I message him about how lousy Sosnoff was at direction and how much money he made. So just keep that in mind. It's all about premium decay. I just can't stress that enough. So, like in there. And like I said, out of the money credit spreads. If you want to go a 5,700, then you could sell a 5,720 against it, sure. But all I'm telling you is when you're doing a call spread in the money and you're selling it, that's like buying an in the money put spread. Do you really want to pay $16 on a $20 spread? Then you better be dead right. We're not here to be dead right. You're here to take advantage of decay. Even though I've been dead right a lot, what did our clients do? When they saw the resistance up here, and if you're wondering what we're talking about, I love to post stuff before it happens. So there you go. Your resistance zone. Right there, your resistance zone. That's a zone, and it doesn't mean it has to go to that price. But once it gets near it, you go to a shorter term chart to time your entry. So this, heck, it could go up another 30 points, but it is near resistance. It's just not there yet. And that's why I want to go over trend lines. The second it broke, you sell out of the money calls. That because now the momentum's broken. Doesn't mean it won't go to a new high, but the momentum, the quickness is over. That's why you don't go and just sell calls here. If you're getting near resistance and you need, to me, a trend line is about momentum breaking on the upside or the downside. The more horizontal the trend line, the more important. That's the way I look at it in here. The more horizontal, the more important. And I thought I'd show you some examples of trend lines. Anybody that says trend lines don't work, well, you know what? There's a time and a place to play trend lines, to play moving averages, to play support and resistance. We find a lot of trend lines on the way down. So when the market's in a downtrend, which it has been, you can see this. The more points of contact, the more important. That does not mean to blindly short. You can see it here too. Trend lines, the more points of contact. What it means is then you're looking for your shorter term trigger to play the direction. And on the way down, heck, been a ton of them, like right out of my short selling class. The tighter the pattern, the tighter the stop, which means if it breaks the trend line and reclaims it, you get stopped out for a tiny amount of money. Look at this right here. If you shorted right here on that tight trend line, right here, and you were wrong, you probably would have lost about 3 points. But if you're right, you probably make 100. So trend lines are incredibly important. Keep in mind, I've been doing this 45 years. Trend lines worked 40 years ago. They work now. So that's how we do it. So let me show you a couple of things I think are important. I thought I'd show you, just for laughs, thought I'd show you an interesting chart about trend lines. The tighter the pattern where you can draw a trend line, the more important. So I just want to make that clear. The tighter the trend line, the more important. So let's see if I can find a good one for you. Yeah, go and check this out. I'm just going to take a different chart service. I'm taking FinViz. Just taking FinViz. I like the light theme, if I can get it to work. There's a lot of pop-up ads, so let's see if I can get this off of here. There. And I'm going to show you pizza, Papa John's. All right. Does everybody I'm just going to do a quiz here. One of the biggest mistakes I see is I see people go, and what they do is they draw too many trend lines. You don't want to draw too many trend lines. You want good trend lines. Now, I'm not sure my screens are working, so give me a second. There. So does everybody see the defined trend lines? I'm hoping you see the defined trend lines. So right here, that's a tight trend line. There's a tight trend line. This is a loose one. It took a long time. I mean, it eventually worked. A tight trend line. A lot of coagulation of pattern. That can be a 1 minute, a 5 minute, a 15, an hourly, a daily. So I found on weeklies, they don't work as well. That's a tight one. You can see it a mile away. Those are tight ones. This, number one, it's almost too sharp a slope. I don't like sharp slopes, but I like tight patterns. Look how many points of contact you had for the trend lines. Look at that. And the key isn't whether it's a trend line or not, it's to respect the break in either direction. So right here is a better short than up here. So you don't Hey, That's just the way it goes, unfortunately, when when you're triple broadcasting or whatever. But I wanted to show you this because so many people are like, oh, the PE is too high, or oh, there's bad news. That's where you short it. Did you miss the top? Sure. But the point is you have a tight trend line. A tight trend line. That's the key. So you have a tight stop. So the second it breaks, that's your ticket. So the big mistake, like I said, is drawing too many trend lines. I don't draw too many trend lines. I draw the trend lines when it's a tight pattern because we watch a ton of stocks and there are a ton of patterns out there. So, and I'll show you one for today. So you got the ES in here. So what's it look like here? Nothing. Swing trade, you don't see it yet. All right, hourly chart. Does it show you anything? Well, it showed you those, and guess what? This is why a number of people on our site bought it here. There's a trend line. The problem is a trend line break against resistance. Heck, the risk reward stinks. Look at that. It's okay, but the risk reward stinks. On the way down, there was no support. It was an air hole, we call it. So that's what we watch. The other thing, and you see it all the time, these rising wedges people talk about. When you get a rising wedge like that, then the trend line is too sharp. I'm not looking for that. So I'm not looking for that. This, we were talking about the cup and handle on a 15-minute. So the little cup and handle, not perfect because there's too much resistance. And as you see, it just wasn't there. This was beautiful. There were a number of people on our site that cleaned up on these bear flags. So now you might say, well, isn't that a trend line? That's the problem. It's not that tight. Was that tight? Yeah. So you go to a 2-minute. Now I'll show you. There's your tight little trend line. So what you got was a little bull flag in a bigger trend line. So you can use the bigger one, but I wouldn't initiate on that. I would look for the trigger. That's what I do. So that's how we do it. Now, here we go again with the thing about selling out of the money options. So if you go and screw around doing this, and you go and you sell like 55, 60, 55, 40 put vertical credit spread when it's here. Well, you bet you're betting on direction before the direction is known. The second there was a reversal pattern here, I'd rather sell a 55, 50, 56, 30 when it's out of the money. I would rather sell it at $3 when the direction is known because it would have to go down 50 just to start losing money. So that's how we do it. So let's just go to the markets now. Number one, what are we keying off of? We're keying off the Russell. And we're keying off the Russell because people are worried about the tariffs. So it was a great question earlier about is it sell on rumor, buy on news? Well, there's one thing you should know in here, and that is that Trump, well, I don't have it verified, but supposedly he's going to announce his tariff stuff after the close tomorrow, not before. And that's why the expected move for tomorrow started going down. Because it's after the close. The SPX expires at 4. That's one thing to keep in the back of your head. Keep in the back of your head. How about everything else? Well, let me show you. So what I'm seeing in here is this. We're watching the trend lines, no doubt about it, but we're watching the trend lines on, and like I said, it's not about the amount of credit. It's about the direction. So if the resistance is up here, then you're looking at something like 20 points out of the money. But that's the problem. Everybody tries to be financially motivated. You're debating on where it could go and what to do. So if it goes from 3 to 0, why care if it's 4 or 3? You want the direction known. That's all you're caring about, is having the direction known. So if it's up here, you don't sell something just because it's expensive, because you don't know when it's going to stop. But once it broke that trend line, at least you had a backstop. What's fascinating is right here, if you would have sold an out of the money call spread and it rallied to test the high, you probably still would have made money, because it took a long time to reclaim it. So, and I'll show you an example. Let's go right here, right there at 1056, and go into the SPX again. Now, I'll just show you. We're going to do it this way. Go into the SPX, and I'm going to show you a chart. Let's see if I can do it. And this all has to do with trend lines. Why am I saying that? Because it's about momentum changes. When you see a trend line break, when you're playing 0 DTE, yeah, that probably means the break in the momentum. You don't want to short something when the momentum's up. You got to have some kind of break. So, and I'll show you what we're talking about in here. So we're going to take the SPX. This is a perfect example of what I'm talking about. So we're going to take it on a 1 minute chart, and we're going to take the SPX all the way back here, right here, where it tested right here 2 hours later. See right there, 1056. So we're going to go and take the 5600 put at 1056. You can chart it. So you go and you take the 5600 put. So we know 1056. Just keep that in the back of your mind. There, 5600 put on a 1 minute chart. 1056, where was it? 1056. It was here. It was 13. See that, 13? It was 13 at 1056, even higher. It's 1320. I'm going to put a little trend line there. Right there. There, it was around 13. All right. Look at what here at 1245. Yeah, the index went to the same place at 1245. Where was the put at 1245? 6. That's right. 7. So you made about 50%. So even though the indexes went back to where they were, you made 50% because of time decay. So on the other hand, if you would have paid the 56, let's say 30 put, all right, where was it at 1056? At 1056, there you go. It was 27. Where was it at when this had the twerk down? 22. That's right. You wouldn't have made hardly any money because you're not using time to your advantage. So I can't stress that enough. Now, like I said, ES is broken. There are two things to watch. What was the first thing I said you have to watch? The Russell. The Russell has brought the market down for the last month. And that's another thing. Go into Twitter and see all these people said, oh, the tops usually aren't in February. So one person in particular, that reminds you, well, the top was February. Then they're like, well, usually the middle of March is the low. Well, it's close. So, I mean, I'm just telling you right now that just go on the charts. Go on the correlations. What's the correlation today? What has made markets go down? The Russell. The Russell is on down for the day. What makes you think the S&P should be up? So you're also combining trend lines. Don't get me wrong. Don't get me wrong. But now you have a trend line here in the Russell. If that doesn't hold, then why should this hold? So the trend lines work. So the other thing is right here. Let's take a 2-minute chart. Let's just take a 2-minute. That's pretty steep. But the second that broke, this was more likely to break. That's all. So the Russell is my tell. And I'll show you another reason why. The weekly chart. On a weekly, I'm telling you right now, when you trade, one of the biggest mistakes I see is using like 10 moving averages and using like 10 different underlays. And it's like having too many golf swing thoughts. You can't even take the club back. If it works for you, great. But I've just seen the less things. I mean, you just saw it here. You see a trend line. Why do you need 100 different moving averages? So that's number one. Number two, though, a weekly chart. Usually when the Russell on a weekly chart goes to the 200 moving average, the probability is the S&P is eventually going to approach it. It's not even close. When the Russell and the transports are near their 200, the S&P and the NASDAQ are more likely to approach the 200. For years, I mean, ever since I started in the business, when you get a sell-off, it usually goes to the 200, let's say 80%, 70% of the time. But if the transports go to the 200, then this works probably 80 to 90% of the time. It's amazing. So it's all probability. That's why the Russell is so important right now. If the Russell can't rally, then that's not going to rally. So if the Russell refutes, that's why so many like me, well, on our side at least, are keying off the Russell. If the Russell can't rally, then you can sell out of the money premium in the S&P. If the Russell does this and the S&P rallies like 5 or 6 points, heck, you'll still make money on 0 DTE. So that's what I wanted to show you in here. So that's the point. The point is the break and the momentum break. So let me just show you. Let's find some other trend lines. I just want to show you some examples. Number one, I know FinViz has like trend line stuff. And longer term, do trend lines work? Well, here you go. Yeah, I've been stubborn in Starbucks. We actually made money in it. Is that a good trend line to justify your bullish position? No. How about a daily? No, not yet. This doesn't have anything. So you go to the next stock. How about Apple? Does that have a trend line? No, not really. Did it have a trend line here? Yeah, that's a little sharp. So let's take an hourly chart. Did Apple ever have a defined trend line that you could play? Well, we did. Let's see if you see it. Let's go to Apple. You don't see it here. Not really. I mean, maybe a trend line here, like a break, like a big old head and shoulders. But here we go again. That's pretty sloppy. That's a sloppy thing because you had highs and lows. It's not enough points of contact. But on the right, let's take Apple on an hourly chart. Did it have any trend lines? It sure did. Does everybody see the points of contact right here? There. 1, 2, 3, 4, 5. Now you might say, yeah, it had 5, but then it fell apart. Right there, there was a bear flag. Right there. So you had time to short it. Did you short the top? No. So, but really cool to watch those points of contact. If you put in a 5-minute chart, let's go back. Let's see if the arrows are still there. There you go. You broke and then you tried to test it. You tried. But the point is the momentum was over. When the momentum breaks, you can sell an out of the money call. Maybe you don't sell an in the money call spread because maybe it sits there for days. This right here might have hurt you if you sold an in the money call spread because it had a 3-point move. But if you sold a 240 call spread for the next week, you were never in danger. So that's a beautiful thing. So that's one. Now let's go to now. 15-minute chart. Does Apple tell you anything? No. 5-minute chart. Does it tell you anything? Well, is that a bullish trend line? Don't take that. That was a bad print. The only one that short that was somebody on CNBC on Fast Money. So that will not be named that I traded with for 8 years. So in the same pit. So, but sure, you can respect the break in either direction. That's a nice triangle. Respect the break in either direction, which means you don't know yet. Now, theoretically, with the NASDAQ up 95 and this is selling off, theoretically, if the Russell sells off, the NASDAQ is going down, which is going to pull this down. So the probability is it's going to break to the downside. So there's a trend line. Okay, how about, I'm looking at a lot of my charts. Let's just go to this. I mean, what makes you think the markets are going to go up if the Russell's almost on its low for the last 3 hours and the banks are on their low for the last 3 hours? So I don't see it. The other is you might say, well, let's look at trend lines. Doesn't AMD have a bullish one? The problem is a trend line at resistance is not to be trusted. We're looking for somewhat horizontal trend lines, not near resistance or not near support. That's what we're looking for. So that's the kind of thing we're looking for. So how about let's go back to all the charts I'm looking at. I look at a lot of charts. That's what gobs up Thinkorswim a lot. Do any of these look like defined trend lines? Not really. This is more slop. More slop. So how about on a different screen? You can go to the Apples of the world. Let's go to that. I'm going to rejigger everything here. 1 minute chart. Do any of these look like defined trend lines? No. Nothing looks like a defined trend line. Maybe Tesla. Maybe that. There. But like I said, the lower the Russell goes, the more likely the NASDAQ is going down. More likely. It's all about probability. More likely. So if that goes down, is this really going to go up? You're sort of swimming upstream. So I just want to make that clear. And like I said, the tighter the pattern, the tighter the stop. So if you see something like Visa and you see some pattern like this and you want to buy, well, guess what? It never got above it. But if it did, if it got right here and got above it, once it gets back under it, you stop yourself out. The tighter the pattern, the tighter the stop. I mean, that's the way I look at it. So like this. There's a nice trend line break. You might say, well, didn't you get stopped here? Well, there are two ways to do it. One way is if it breaks and you want to play it to the downside, if it has that little pop, it never got over that ATR trailing stop. You know, I'm really into that ATR trailing stop. But if you want to do it only with price. So number one, I don't just use the moving average. I don't use in here, but let's just say you did. Number one, if you're shorting on the break and you get stopped here and the next candle's down here, you just re-short it. Commissions are free. That's all of 10 cents. So now if it got over the ATR trailing stop, I probably would just stop myself out. But that's why the tighter the pattern, the tighter the stop. So thanks for listening. I see I have to go. Sorry about any technical issues. Talk to you later.